Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for April 14th, 2024. Well, about halfway through this month, and my goodness, it's been a wild one. We have a short week this week with Good Friday, the market being shut down. There won't be anything going on there. So we're going to start this week off on a positive note. Over the weekend, the president put in some exemptions for some electronics and smartphones, and that's got the market feeling a little bit happier here this morning. So let's get into it. Well, first off, let's take a look at what happened overnight. Overnight, we had Asian markets up across the board. Australia was up 100 points. The Nikkei was up almost 400 points. India was up over 400. We had Hong Kong up over 500, and Shanghai was up at 2458. Even South Korea was higher on the day. If we take a look at European markets here this morning, nice little bounce back there in European markets. Decidedly bullish this morning. The DAX being up over 450 points right now. The FTSE is up 138 points. We've got the CAC up 134 points. So quite a little bit of bullishness going on there. If we look at pre-market futures, U.S. futures, the Dow is up 377 points at the moment. We've got the S&P 500 futures are up 71 points, and the NASDAQ futures up 282 points this morning. Let's take a look at what we've got going on in bonds. Bonds here this morning, a little bit of a mix in those bonds. They have been moving back up, but they're easing off a little bit here this morning. 2-year bonds right now coming in at 3.90%, 10-year bonds 4.43%, and the 30-year bonds 4.85%, as we continue to do quite a little bit of fluctuating around. If we take a look at US dollar this morning, however, it is lower. You can see in here we've broken down below this area of price support here in the chart as the dollar weakens. We'll want to watch that carefully. As of right now, down 60 cents on the dollar. So we'll have to keep a pretty close eye on that as that dollar weakens pretty sharply. Let's take a look at oil here this morning. Oil has had quite the roller coaster ride and whipsawing around here on prices here on XLE. We've been kind of like an eye test where up one day, down one day, up one day, down one day. Well, we're trying to follow through this morning with a little bit of upside. So we've got oil futures right now up 60 cents a barrel at 62.10 a barrel. Brent crude this morning is also up about 56 cents at 65.32 a barrel. Natural gas, however, is moving lower here, so keep an eye on UNG. If we take a look at precious metals here this morning, I sold my precious metals, my gold position on Friday, and now I'm glad I did. Right now, gold futures down $18 an ounce, about $18.80 an ounce, at $3,225 an ounce. I would tell you though, a little rest, a little consolidation in here, a little pullback, and I'd be looking or watching for that next opportunity to the upside. There have been several organizations out there saying pretty good opportunity that we could see gold move on higher here. So Watch that carefully. Silver, however, still holding in there with a little bit of bullishness. It's been rallying back strongly the last few days. Right now up, let's see, 27.5 cents per ounce at 32.18 an ounce, trying to push back up. You will want to notice, though, we're pushing up into a fairly significant area of price resistance. Little rest, little pullback in there could create a lower high. If it can hold in here on this pullback and put in a higher low, then we have an opportunity for some more upside move in there. Copper also stretching a little bit higher here this morning. This has been really sold off, and keep in mind as we push back up, we're going to run into huge areas of price resistance there in copper. Platinum and palladium also moving higher this morning, and once again, we could run into quite a level of price resistance here in those charts. Let's take a quick look at what we've got going on in the cryptos markets here this morning. Bitcoin getting a nice push here this morning, coming up out of this bottom, up $772 a coin here at the moment. Keep in mind, as we push up, if I were to redraw this downtrend in here, we're pushing up through these areas right here, and we're going to try and break that downtrend here on that chart. Remember, the key element here is to hold a higher low. That's going to be really, really important. Just crossing straight back up, well, we've seen a lot of those here recently where we get a big zooming move back to the upside and then completely reverse. Good example would be right over here in the chart. You can see how we zoomed back up, slammed into price resistance, and, well, just reversed. So be careful with that. Whoops. There we go. Ether also trying to push up, but here again, we have that situation of downtrend, significant levels of price resistance in there for us to be paying attention to. But it is good news. We got this little relief rally going on here that is trying to follow through here on Monday morning. So looking pretty good in those cryptos across the board at the moment. So what does all that mean for the day? Well, how about we settle in? Let's buckle up. Let's get ready for the Monday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. I very much appreciate it. Let's take a look at these index charts, see if we can figure out how we might want to approach the market for today. Remember, we want to look at these charts for what they are and not for what we want them to be, meaning we want to take a look at the all possibilities in here, and I think everyone understands just how volatile this market has been. Anything is possible here, so we need to look at all those possibilities. First off, relief rally continuing here this morning, pushing back up. You will want to take note, though, as the bulls push here, we're going to be pushing into fairly significant levels of price resistance in the chart, and as we push back up through some of these levels, we'll be coming up back in here to retest the downtrend here of the diamonds. So keep that in mind. If the bears have anything to say, it's not that hard to see either, that possibility that we could push back into some of these areas of the chart, and if that were to slip, then I would kind of suggest we might even pull back into this area of the chart. Now we want to remember on our moving averages here, we're up above our 500-day moving average, but we've got a long ways to go to even make it to the 200-day moving average. And what we're going to end up doing as we push back up here, we'll want to watch this area very closely right up in here. We're creating a major zone of technical resistance and price action resistance in the chart. So watch that carefully as we push up into that area. Let's take a look at our SPY. Very similar here in the SPY as we push back up in this chart. We're pushing back up into price resistance levels. Remember, we still haven't been able to get back above here on the SPY back above this level right here where we big daily reversal. We haven't quite made it back up there, and as we continue to squeeze and push, we're going to run into some price resistance that runs back here in the chart. We're going to run into that next level of price resistance right up in there on that big candle, and all that price resistance and downtrend that we're going to come into on the chart. So be really careful. One of the things I've been cautioning folks is watch carefully about the knee-jerk reaction chase here, because those whipsaws can be so substantial. Now, taking a look at that, we've got, if the bears have anything to say, pushing back in here, you can see we've gapped above this area. I would say a pushback into here could be a possibility, and then of course if that were to fail, then back down into here. Let's take a look at our QQQ. Our QQQ, again, very similar to the SPY. We're gapping up here this morning, and we are pushing up right this morning into pretty substantial price resistance in the chart. That tariff relief on chips and smartphones giving us some inspiration here today to gap. So watch this area here. If we can get enough bullish action here pushing through that high of that big candle reversal, we're going to be facing that downtrend and significant levels of price resistance in the chart. Breaking through there could really bring in some buyers and push us up into this next level of price resistance in the chart. Those bears, though, if they have anything to say and they push us back down, I'm going to suggest this area of price support right in here to see if that can hold. And if that were to give up, then I think we have that possibility we could move back down into this area of support. Keeping in mind that if we look at those moving averages here in the chart, on those moving averages, we've got a long ways to go to get up there to our 200-day moving average. And looking right through here, we're going to have a major zone of price action and technical resistance in the chart to get through. Our IWM, as much as this guy has rallied off the bottoms, please keep in mind that, oh my goodness, we've got some work to do here on the Russell. And when we see money flowing into the tech, the Russell usually suffers a lot, just can't get enough energy in here. And you can see we've still got to get this above that big white candle here in the chart. We're still below the 8 exponential moving average, our T-line in here. So a push through here, I would suggest resistance right in there. And then as we push up, we're going to start looking at these additional areas of resistance on up in the chart. Now, keeping in mind, we're still below our 500-day moving average here. Our short-term 34 EMA 20 simple moving average down through that 500-day, and we're going to create a fairly big zone of resistance right through this area of the chart in technical and moving average resistance. So keep that in mind as we squeeze back up here. Remember, if the bears have anything to say here today, well, push back down. We've got some support right in there to pay attention to, and if they break down below there, then I'm suggesting maybe right back down into that area of the chart. So watch that closely. Let's take a look at our VIX here this morning. Our VIX did finally ease up a little bit on Friday after quite the whipsawing around in here, easing up just a bit. We will want to keep in mind that we have broken back down below this high point of support in the chart. That's good news, and I would suggest that with the bullishness that we're seeing this morning, we're going to keep that push to the downside going in here. Watch that there for that volatility of those whips. But as we push back down, let's see if we can break down below these areas right in here and start pushing back down toward this area of price support in there in the upper 20s on our VIX. You can see we've got some pretty good areas of price support there to be watching. So that'll relieve things a lot, might close up some of those bid-ask spreads, make it a little bit easier on those options if we can get some of that pressure down here. But you will want to keep in mind we have this pretty steep upside trend here on the VIX. So breaking down through here, we'll want to be watching this area right down in here and that possibility that we could bounce back up. So be careful here as we stretch to the upside, realizing that right now all it is a relief rally. If we take a look at our T20s, our T2122, well, our T2122 indicator pushing back up and closed Friday above this mid-range here in the chart. So what that means is if the bulls can continue to push and this gap up this morning that we're getting, we could very quickly have our T2122 be up here getting a little bit stressed in that bearish reversal zone because we're so far off of those lows. So watch that carefully. We've got plenty of upside room to move this morning. We also want to recognize we got plenty of downside if that whipsaw were to come into play, if any of that bearishness comes back around. So watch that carefully. And then our T2108 percentage of stocks above the 40-day moving average. Well, you can see here on Friday it was a nice little recovery. We did push up, but I gotta tell you guys, it really wasn't all that impressive. So be careful with this idea that we're just gonna zoom back to the top. We might, but be careful with that idea, just simply because we've only got about 13.5% of the stocks out there above their 40-day moving average. Clearly we need a relief rally and we need a recovery, and we'll have to start dealing with some fairly substantial areas of price resistance here as we start moving back up, and then keeping in mind we've got this overall downtrend in here as well to be paying attention to on T2108. But let's see if we can continue to push this up toward those resistance levels in the chart on this relief. Let's take a look at our T2107. Similar situation here, but just a little bit weaker. If you notice here on Friday, we didn't even take out that recent high on the rally on Friday. Today, I suspect we will take that out, but you will want to keep in mind as we push back up. Right now, 17.5% of the stocks above the 200-day is a long ways from being bullish. It is a recovery, but only a recovery at this point. So watch that carefully. If we can push up into some of these areas of resistance and downtrend, then we'll have to make some decisions here if we're turning over into more of a bullish upside trend or just a relief rally. Let's take a look at our T2101, and our T2101, unfortunately, when we get this bullish move coming in the market, we're not getting it to follow with the breadth. The breadth was there on the bearish wave. Yes, Friday it was not there on the bullish wave, so kind of keep that in mind. Watch that breadth here today. If that continues to sink, then we'll have to start worrying as we reach some of those bearish reversals zones in T2122 and that breadth continuing to pull back. Now remember, one of the reasons the breadth is pulling back is because we're in that blackout period. As we begin these new earnings, we'll start slipping out from under that blackout period after enough companies really start to report. But we've got a ways to go before we're out of that blackout period. So don't even be too surprised if we kind of slip into a little bit of a choppy consolidation range here for a little bit, just to kind of rest and heal up a little bit from the wild volatility. Let's take a look at our economic calendar here for today. Now our economic calendar, not much going on here this morning. In fact, it's a fairly light week in here on the economic calendar, remembering that we're closed on Friday, so we've got a short week here to deal with. Today, about all we've got to worry about here are bonds. We've got a 3-year, 3-month and a 6-month bond, and a couple of Fed speakers in here. And that's the size of it on our economic calendar for today. If we look into Tuesday, we're going to have Empire State Manufacturing, import-export prices, some bond auctions in here to be paying attention to. On Wednesday, normal mortgage applications, but then we're going to get a little bit of a heavy hitter. We get that retail sales, industrial production, business and housing inventories. We're going to get petroleum status numbers. We got some bond auctions and, of course, some more Fed speak in here, with the 20-year bond auction being notable here in the afternoon. And then on Thursday, housing starts and permits and normal jobless claims. We're going to get the Philly Fed natural gas report and some bond auctions in here as we kind of wrap up and head into Good Friday. So kind of keep that in mind with that shortened weekend. That always makes markets a little bit nervous. So watch that carefully. Let's take a look at our earnings calendar here for the week, and our earnings calendar, at least for today. Today is pretty light on that notable list. We've got MTB that we'll be reporting this morning. That's about the only notable here for the pre-market today, so kind of keep an eye on that. A regional bank, looks like we got a little bit of whipping around here in the pre-market on that. After the bell, we have APLD, we've got FBK, and we've got PNFP here for the notables this afternoon. So watch some of those. We will start picking that up here just a little bit more as we get into Tuesday, Wednesday, and Thursday. We pick up on some of those numbers. Remember, we're going to be ramping up on earnings here. We will not be reaching those big techs here for just a little bit, though. We've got some more waiting here on those big techs. It'll be not until the 24th that we start getting Microsoft coming in. So we got a little bit of time to wait before we hit those really heavy hitters in the market. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor and click that thumbs up button, leave a brief comment, that helps the channel to continue to grow. And thank you so much for everyone who does take the time to do that. I do truly appreciate it. Let's also, if you could do me that favor, and that is just continue to show kindness to the folks that do support the channel, making sure that you give them a thumbs up comment or a thumbs up, and maybe even a little comment on their comment. That helps. That engagement with the video helps as much as anything else. Let's take a look at some of these stocks that could be setting up. And remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful in this market, remembering that the volatility of this market is very strong, and it is a tough one for retail traders when we see these institutions tossing us back and forth so dramatically in the market that it does require quite a little bit of risk appetite, which can be a bit dangerous for the retail trader because it drains your account so quickly when those reversals happen. If we take a look, though, Monster is one of those charts that I've placed an alert on. I really like the way that chart is setting up here, and it is in that defensive sector area of the market. When markets are nervous, where markets are uncertain, here we could see some of these old boring defensive sector stocks looking pretty good. So take a look at Monster. Take a look at Colgate-Palmolive. Nice stretch back up here. Now we are dealing with some resistance here in the chart. I wouldn't rule out the possibility of a little rest, a little consolidation in here, but keep an eye on that. Though some of those old boring dividend payers are still looking pretty good and trying to come around. Today we might get a little more of that risk on here in the market with the ease of the tech tariffs. So we want to start looking at some of the big techs in here. Take a look at Microsoft that has been trying to move back up here and broke this downtrend here in the chart. So little pullback there and held and trying to follow through here today with an upside move. So if we can get 2 days in a row, that would be a nice change here for us to see in the market, where we can actually follow through a day. So watch this carefully in here, starting to come back up. Now this has got a ways to go before earnings, but crossing back up through here, you can see that possibility that we could easily form a bit of a head and shoulders pattern here in the chart. So watch that carefully. Any rest or pullback in here, if you're not already in this, a little rest or pullback, I would look for that opportunity there in Microsoft. Take a look at stocks like AMD, so incredibly beat down here in these charts, pushing back up here into this downtrend. I think in price resistance here in the chart, so we've got that double whammy of this downtrend and price resistance. We need to pop through there and then prove we can hold up here, and then I think there may be some upside opportunity there in AMD. Take a look, Google doing the same thing, trying to squeeze out from underneath this downtrend, and you could have it here, you could easily have it here where we're testing that downtrend right now. And of course, not only that, but we're going to be running right into that price resistance right there in the chart. So watch that carefully as we approach that area for that potential reversal. But if we can hold, this is the big but, if we can hold that higher low in here, then that sets up that inverted head and shoulders pattern, that upside opportunity here in Google. Keep an eye on that. There's also going to be quite a little bit of anticipation about these earnings reports to see whether or not we can move to the upside. Now, I would be really careful with the idea of thinking that Google or any of these are going to zoom back to the upside with the complications that we have in the market right now. But at the same time, anticipation of those earnings could push us up toward that earnings event. But I would be really careful about holding them through that earnings event because of the volatility that we could easily experience. If any of these companies stumble, we could have some tough times here in the tech sector, continued tough times in the tech sector. So watch that closely as we move up into earnings. Take a look at stocks like EA. EA has been moving back up. We love those gamers. And you can see pushing back up here, pushing into that price resistance. Any rest or pullback in here, consolidation, breaking through that area. Well, maybe we can resume to the upside. I was looking at this nice bullish upside trend when everything fell apart, but then we've got this little inverted head and shoulders pattern that could form in here and start pushing into the upside. So keep an eye on EA. TTWO might be another one to watch. TTWO recovering strongly this last week, pushing up. Now clearly resistance up here to be considering and worrying about, but if we could just rest here just a little bit, put in a little bit of a higher low, pull back to support, maybe look for that opportunity maybe to push on higher in that gaming sector, TTWO. Watch that carefully. Some more defensive sector stocks that had a really big push last week to the upside. Take a look at Walmart trying to recover here dramatically, pushing up. Any rest or pullback in here I think sets up that opportunity after breaking through price resistance and downtrend. Costco might be another one, testing those resistance levels up there to see if they can get through. Saw things like TJ Maxx making a pretty good push here, trying to break through some resistance in the chart. So any rest or pullback might set up an opportunity there. Carvana trying to come up out of this bottom. Now clearly we've got a pretty big area of resistance here to deal with in the chart, and I think this is going to be one of those that may be just a bit more on the challenge side with all of the auto tariffs and things going on. But watch that, if that can pop through up here or even hold that higher low, Carvana may come back around in there to the upside. Take a look and continue to watch some of these good strong dividend pairs like American Tower. Running back up in this chart, we had a good zooming move and quite a collapse there, but if this can hold in this area of support, you might want to look at American Tower because we've got such a good strong dividend payment in here. It's a safety play in the market where we can hold in here and look for that opportunity maybe to push on up. I'm still holding AT&T, and I'm still liking AT&T, although it has pulled back here recently, paying me really nicely as I wait here as well on this, and a nice little safety play. If you look at that weekly, no particular worries there on that weekly just at the moment. So keep an eye on some stocks like that. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great results in your trading. Watch for that volatility to continue, and watch for the fact that we are in a relief rally, and right now it's relief rally only until we can actually prove that we can hold some higher lows rather than just whipping those higher lows. And we've got these just major areas of price resistance coming up in our index chart. So be respectful of that. If you jump in, here's the thing, and something that I've done many times in the past, I would jump in thinking, finally, the relief is here, everything is great, we're just going to take back off. And we push right up into those resistance, and then we pull back, and you get hurt pretty hard. And when you look back at the chart, you go, well, of course it pulled back there. Look at all the price resistance in the downtrend. Don't be fooled by that, and don't get caught up over trading, pushing right into those major areas of resistance. So with that, have a wonderful day, and I'll see you right back here bright and early Tuesday morning. RWO folks, see you in the trading room soon. Wish you all the best.